Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders to the COT data. So essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment the market is rejecting to the upside a quite strong level of historical monthly demand and support. In fact, exactly here this previous red candle was created. So at this level, the market found resistance in the past. Then the market broke above that resistance, and what we know is that previous resistance, once it is broken to the upside, becomes support. The market then went and tested exactly that previous resistance turned support, and the market respected it as support, as you would usually expect in a situation like this, creating this massive rejection to the upside. So at the moment, the monthly time frame seems quite bullish. We can also notice that from a pattern perspective, we have a clear impulse and correction. And in general, after an impulse, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 50%, 0.618 and 0.786 Fibonacci retracements lining up exactly with this level, therefore creating a confluence of support inside of this zone, which we could in fact expect the market to reject to the upside, because inside of a confluence of support level, you would expect to see more institutional longing. And we will be speaking about institutional longing later on when we move to the order flow. But for now, let's drop down on the weekly time frame and see what we have from a technical perspective on the weekly. Now, what we can notice is that if we check what kind of trend the market has, it is clear that we are currently in an uptrend, with the market creating higher highs and higher lows from a weekly perspective. We're now at the creation of the third weekly higher high. We also had the previous low here, higher low here, another higher low here. So the next logical step would be to see first a correction and then the continuation to the upside, essentially for the creation first of a new higher low and then of a new higher high. Dropping down on the daily time frame, what do we see? Now, from a daily perspective, I spoke about USDJPY just a few days ago. After the market created this massive impulse, I explained all the reasons for which we could expect first a correction and then the continuation to the upside, which is in fact exactly what the market did. And by the way, I will link in the description that previous analysis so you can go and check it out for more free education. But at the moment, what do we have from a technical perspective here on the daily time frame? Now, before we go in detail into what we have here on the daily, first, let's go and see what we have when it comes to the commitment of traders. So what hedge funds and the big players in the market are doing precisely on the JPY. Now, what we can see here is that with the last reports, net positions have been massively decreased. We went from having minus 102.3k net positions all the way down to minus 165.6k net positions. So a massive decrease of the net positions, showing how institutions have been moving to the bearish side for the JPY. Now, keep in mind that all currencies on the spot are traded against the USD. So if we're looking at the data for the JPY, actually we're looking at JPY USD. So if institutions are shorting JPY USD, they are essentially longing USD JPY by shorting the JPY. So what we can notice here is that we had tens of thousands of shorts added on the JPY with the last reports, means longing, all these longs added on USD JPY, because we're looking at the shorts on the JPY. So as institutions are longing USD JPY, this increases the probabilities of getting even more bullish continuation. So if we move back here on what we have from a technical perspective, On the daily, clearly at this level, we have previous daily resistance from which all this move to the downside was created, which is now turned support. And from a pattern standpoint, we also have a clear impulse. And if the market would create a correction, if we want to measure that correction, we have to take our Fibonacci from the low to the high, which shows us how clearly we would have the confluence of the Fibonacci levels, potentially the 0.32 or 50%, exactly with that previous daily resistance turned support, therefore creating a confluence of support level at this level here, that if the market would correct to, we would have a high probability of seeing more institutional longing exactly inside of this zone, which at that point would further increase the probabilities of a potential push higher away from the level. And by the way, if you still haven't, make sure that you join my free Telegram channel so you never miss out on new updates. You find it both on the screen and also linked in description. Now back to the analysis. As I was saying, if we will get this retest from here, there's good probabilities of getting a potential push higher. So what would I expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market at that point, I wouldn't be surprised to see a potential push higher, completing this daily impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.